me just start recording and let everyone in. Okay, so I'm going to start with GU. There we go. Okay, so the first thing I actually look out for, and the timeframes I look out for, is mainly 1 hour to the 15-minute. You can use the 30 or the 15. It pretty much, a lot of times you have the same confluences. So as you see here, this order block area, exact same on a 15. So if you're trading a 30 or you're trading a 15, a lot of the times you have the exact same setups. So I don't really think it matters as much when you're trading like that. But when you see people trading like the 4 hour, you might miss setups, but like tight entries compared to if you're trading a 15-minute. So what I actually look out for is untested areas. So we've got this area at the top here, which is obviously untested, but because there's no wick, a lot of the times when it does this and there's no wick, it literally is just manipulation, because price has gone up, and as soon as it's hit that level, it's dropped down again and hasn't tested that level again. So once we actually had this candle here with these two small wicks above it, tiny wicks, but there was something there. This is when I actually drew this level across for price to actually come into. And the first thing I do is look for areas of liquidity to be taken to get the entry. So, I've talked before about entering on the top of the order blocks. So this would be this level here. That's why I've actually drawn this across. And now we're looking, how can we get the entry here? How can we add confluences to this trade to make it either a higher probability or one that will fit the plan to actually enter the trade? So what I saw was this area here, and it's quite obvious an area of liquidity. Although people would see it that trade support and resistance as a resistance area, and the fact that this actually does act as a resistance is actually good for our strategy, because a lot of times we're entering on this liquidity grab to the upside before price then does make the move below this level. So I saw this buildup of liquidity in this area. I have my alert just below this level here, because why is this significant? Well, this is the New York high for that session. And, it wasn't just any New York high. It was a big wick that closed above, or not closed above, wicked above the rest of these candles here, and above the previous wicks, which we've seen to the upside. So you see this area here, manipulation, wick to the upside, then drop. Same thing here in this area, wick above, drop. And then this is, again, another confluence, which we could see price wicking up from this level, because it is, the same level, tapping into it again and again before then making that drop. You could have got in on this first wick here, but again, you don't really have the confluences. You could say this order block here, but pretty much been tested, the full thing. So now we've got to think, okay, how could we get on in this trade? So once we've drawn this New York high across, you can see that when price actually came into this level, closed pretty much below it twice. And when we're using that order block over here as our actual entry trigger, it means you can get super, super tight entries. But let's say you missed the entry. A lot of times I talk about there's always multiple entries per trade. And, this is true. So let's say you missed this, or your broker didn't put you in. Worst case scenario, you're not in the trade. Price drops down. Instead of just FOMO entering into the trade, so thinking, okay, I don't want to miss this, what you do is you wait for price to come up and test this level. Because what is this level? Another order block, or another, people call it double flats, order blocks. Top of the order block, it's literally all exactly the same thing. Kind of a tweezer top as well, and tapped into this area. And a lot of the times what we'll see is London come to the Tokyo high and then drop. So we pretty much, this was the Tokyo highs here. We came up, almost equaled the Tokyo highs, and then dropped to the downside. And once again, a lot of people ask about the London scalps, and this is kind of what you can do here. So you could have caught the move to the downside, but then we have this area here. So if we look, this is actually the the New York low from the previous day. So if we're looking back now, this wick, if I actually draw the wick across here, you can see that this wick acted as a sort of support area where you see a lot of traders, they actually target these areas, and you'll see they get like sniper exits. So they'll enter, let's say up here, the target will be down at this level and it'll be hit to the pip, and then it will reverse. And you're thinking, oh, how do they get these entries? Most of the time they're targeting the previous day's high or low. And this is what I do as well. Targeting these highs or lows, you can get sniper exits, which means you're maximizing the profit which you can actually make. And also if you're using these as, another entry confluence, if price is just taken out a previous session or a previous session low, then it's going to be an added confluence. You see London took out the Tokyo. We tapped in to the order block. We grabbed this liquidity. We tapped this previous area, filled this imbalance as well. There's probably 4, 5, even 6 confluences all together on this one trade, which you could have actually taken. And most of the time I'm either using the fib or the order block for the entries. And this one was a perfect example of the order block. If you probably draw the fib on this level, literally just from the top of the candle to the bottom across, 4 taps lines up perfectly with this level here. So again, another entry confluence that could probably bring us up to 6 or 7 confluences on this one trade here. And again, stop loss wise, I'm not sure why it was 13 pips, but there's obviously a reason for it, but you could have had tight stops. Forex pairs, I usually aim for 5 to 10 pips. Gold, recently I've had to increase it because obviously the markets are kind of crazy. But let's say even with a 13 pip stop, and let's say you're targeting this area, a 1 to 3.6. You're risking 1%, you made 3.5%. You're risking 2%, you made 7.5%, pretty much 7.3%. And 1 or 2 of these trades a month, and you're absolutely sorted. Let me just see. Okay, so if we go on to GJ, this was a nice setup. And it was a weird scenario with the gaps that actually happened. I was actually wanting to sell GJ from a level up here. I think I had a higher time frame fib across this level, but we did gap like crazy to the downside, which meant I had to adapt the strategy to trade around the gap. Because when you actually have these gaps, a lot of the times price will either make a move further to the downside. So say we gap to the downside. What I've seen previously is price will continue to the downside and then make the move up. So people that instantly buy the gap at this level, let's say, would then be stopped out or be in drawdown before then price comes up and actually fills the gap. So you have got to be careful trading just the gap fill. That's why I wouldn't trade just off if there's a gap to fill it, because it can take a while to fill, as we'll see when we look at EU. But main confluence for this trade was, we had this level here. It's kind of like the other trade, but we had a different entry style. So we had this area, got 4 taps here, another 3 here, another 1 here, and you got this break above. And the reason why this was an even better setup was if we draw this across again, we had a break and retest. So a lot of times break and retests are fake. So you break, retest, and if support and resistance break and retest works, or it did work properly, then everyone would use it and everyone would be profitable, because that's the first thing that people learn. And most of the traders, it wouldn't be a 98% failure rate if it actually worked perfectly. So once we actually got this and we got this close below for the end of the week, this was a very, very good sign. And what I actually did was I used this closure, these last 2 30-minute candles, as an entry opportunity. So remember, what do we do on imbalances? We draw the fibs. So if we draw this across top to bottom on the fib, body to body, you can include wicks, but I wouldn't say it's as accurate because wicks can be manipulated. Look at that. Perfect again. So we saw the example on GU where the imbalance fib on the 15-minute time frame was to the pip on the bodies. And again, the same thing here. You know, how many pips of drawdown did you have? You had like 3 pips of drawdown. It's literally nothing. If you're looking risk reward wise on this, what would you have done? So you could, remember I said you aim for 10 pips. If you had 10 pips on this one, would be absolutely perfect. You know, it's above this this order block here. It's above the high, and also in this area, we've got this like another liquidity zone, this sort of rectangle area. And you know, target wise, my original target was going to be this level down here, because you see we've got this order block, which was untested. This one was kind of tested by this wick, which could have given you a nice sort of buy, but there's not really enough confidences to actually enter that one. But this was meant to be my original target, but I actually changed it when we had this gap, and I actually targeted this wick here, I'm pretty sure. A lot of the times when you have these wicks coming into a big imbalance candle, you'll see them get filled, like just the wick, and then we could drop. So kind of like this trade here, we came down, and the same sort of area, although it wasn't exactly the wick, you see where we came into the imbalance area was where we then tested again. So it's kind of like retesting a percentage on the imbalance. So it's kind of like when you have the fib level, let's say we have a 61, and then price comes back up again to test the 61, and it still is valid. It's kind of like the same thing here. So let's say you had an imbalance on here, and this was the 50% as an example. You could have got another entry on it, or you could have targeted it as a potential reversal area. And if you guys are keeping up with any of the trades I've been taking recently, you'll notice that I scale in quite a lot. So when I passed the FTMO, I passed it within the first hour of actually getting my login. And that was literally from just scaling in my entries. So the way that I do it was, you've got this perfect entry up here. You know, you're instantly pretty much in profit. And a lot of people, they just move their stop loss to break even, maybe take partials at a 1 to 2 or a 1 to 3, and then you'd only make, let's say you take 50% partials. You're then only making on that rest of the 8% for this trade, you're only making 4%. So you're missing out on 4% profit because you couldn't hold to your target and you wanted to take the partials. But what I actually do is, so this was in profit, lovely. If we actually look here, we've got this big candle up, and then we've got this test of the candle. And a lot of times when you get this test of the imbalance, it lines up with the fib. So if we draw the fib across here, you can see multiple entry opportunities again. Double tap into here, nice tweezer tops. And then remember I said, I always enter on top of the order blocks or the fib, or here, you've got both. So if we make this red, so you can see it separately. So if we zoom in, you can see that we've got the tweezer top or double top sort of a candle here. We've got the fib, and then look, you've got another entry. You could have entered on the immediate pullback on this candle, on the fib, perfect. And what I'd do was I'd enter another position. So let's say we got this one here. Again, 10 pip stops. Let's say you're targeting the same area. And now this trade up here is risk-free. So this trade, no matter what happens, you're not losing any money. But now with this re-entry, you know, price is still valid for the sales. And now you're getting another entry. So now worst case scenario on this trade is, let's say both hit the stop loss, because this one's at break even, this one's at 10 pips, you'll lose 1%. But let's say the trade goes right, you make 6%, 10%, you make 16%. And let's say you lose this trade and this goes to the upside, stops you out on both positions, you lose 1%. That's fine. The next scenario, let's say on GJ or whatever pair you want, it happens and it goes right. You only need to have this trade go right a certain, like 1 out of 10 times, let's say, and you're making profit still. You could probably have it actually 1 out of 20 times and you're still making profit because you're catching the bigger move. And obviously, once we're right in the markets, we want to capitalize off our technical analysis. There's no point closing halfway towards your target because you're happy with the profit. No, your target was there for a reason. See, our target was hit eventually. And this pullback, although it just missed our target, you might be like, oh, well, I just missed out on 7% profit because it pulled back. And you might just close because it's coming close to your stop loss. And the way I see this is just another opportunity to get into the markets. It's presenting another entry for me to make even more profit on the trade. And, one trade like this, you've passed FTMO. Scaled in like this, you've passed the verification as well, if you got the details in that time period. But yeah, that was my GJ trade. UJ, this was another very, very clean setup. And this was actually, I did my main analysis on the 1 hour. A lot of the times when I'm trading off these order blocks, I'll mark up the order block on a 1 hour and sometimes go down to 15 to enter. Mainly, I enter on 15. But if it's a longer trade like this, you've seen this trade, 100 pips, 73 pips. It works exactly the same on the hour. GU, again, 65 pips, that's a decent amount for a Forex pair. You could enter on the hour, the exact same thing lines up. And this was the exact same here. So this wick here was actually the London high. I'm pretty sure actually this one here. But remember what I said, the 1 to 1:30 or 1 to 2 p.m. UK time, you get that sort of manipulation. And these wicks can be quite important. And just the fact that they're manipulation doesn't mean you can't use them to enter or use them as a complement, because it's obviously there for a reason. And I drew this small order block here across from the 1 hour time frame. And as you see, this one was important. People get confused on which order block to actually use. But the reason I used this one was because this was the one which broke structure. So this was the last bullish candle before we then broke to the downside, and it wasn't tested. So this was yet to be tested. I drew the line across, and then look what happened. Price tapped into it to absolute perfection, dropped down. I missed that entry. So I was like, okay, the move is still valid. And what we've done here, we just left liquidity to be grabbed. So some traders would see this as a sort of tweezer top here. We kind of got a QML forming. Didn't work, but QML was forming in this area. So you could have seen a nice QML appearing in this area. And if we actually go down to the 15, the 30 actually was my entry, what we saw was we had this 1 o'clock wick drawn across, this manipulation wick, and this was actually taken on the open. So this was another good sign for the entry. I set the sell limit on the top of the order block, like usual. So at the top of the order block, read the sell limit, absolutely perfect. Sometimes you don't need those 6 confluences, those 5 confluences for a trade. Sometimes price is just in an area, and after time you'll realize, okay, this area has liquidity in it, and you can actually trade off this liquidity. If we line that up there, if we look, we had wick up, drop. Again, we've got price in this area, failing to break above. The final move above was this wick, took out pretty much the London high, and then dropped to the downside. So again, you've still got a couple of confluences on this trade if you actually got the entry. And like I said before, let's say we draw the fib across. There we go. But you've got perfect entries here on the fib. You've already got entries here on the fib, because remember I said they can still be valid in the future. And then what did price do? Absolutely melted to the downside. And this is the exact same scenario as GJ. If we look back, you can see push, pull back up, created that order block and fib area for us to sell. If we look here, draw that across, the order block across, it's literally the exact same. So let's say you're trading both these pairs, double the profit. And again, you see you've got the entry up here from the fib, You got the entry up here on the fib or the order block tap, and multiple entries per trade. Like I said, once you get these scale-ins, that's when you can start to make some serious money. And that's when you'll start to realize that FTMO isn't actually that hard to pass, because you can literally say you've got a 1 to 4 or 1 to 5. At the end of that trade, you could be making 1 to 10, at least minimum, just from adding the scaling plan, which I actually use. Euro USD, this was actually an interesting one. And this is why I say to not just trade the gap fill. Because if you look, this gap here hasn't even been filled. And if you're trading a gap fill and your TP's up here, well, then you're going to be absolutely destroyed now, because price has gone to the downside. You would have caught quite a few pips. Let's say you bought at the gap, at the open even. You would have caught like 125 pips. But if your TP is the gap, the fill of the gap, well, you're not going to make profit, are you? Because price has now gone to the downside. But the way I actually caught these short positions, I think it was one of these levels. This is actually a 5-minute trade, I'm pretty sure. Yeah. Okay, so a lot of the time when I'm scalping, I'll use 15-minute or the 5-minute. I never usually go lower. The 1 minute is kind of the same strategy on each time frame. You just have a higher chance of being stopped out, in my opinion, on the lower time frames, because you can just get wicked out. And yeah, that's what happened on this trade. So originally I was looking to enter off this order block here, and I actually entered here. We had these triple taps, and because I had a sell limit, we got in perfect, and then price dropped down. I was in nice profit. I had 7 pip stops. I think I was up a 1 to 1 maybe. Actually, probably not. Oh yeah, we were up just over a 1 to 1, and then price then stopped me out. But then I failed to realize that at the time I was trading like a losing trader, because the basic thing you first learn when you're looking into liquidity is double tops, and then double tops get taken out. So what we've got that double top, and above here is that money. So I didn't realize that this is just going to get taken out. This is just liquidity building up, stopping out all the sellers first to then sell off to go to the upside. And I didn't realize this at the time. I was being very stupid. And then we got that push to the upside. And this is where I got my entry. Once we actually got this wick above, I knew that price was, just manipulating out the markets. And then if we look now, we had the drop down, and then I moved to the upside. But how I got the perfect target was, once again, where would you target? You've got that order block there. Remember I said before about these triple taps, or if you got in this area, you've got the triple tap. If we go, I think I had a fib as well. I can't remember what time frame it was on. Let me have a look. No. It also lined up with a fib. It might be this time frame actually. The hour. Yeah, there we go. Because a lot of the times, so say you're on a 15-minute, this higher time frame fib can actually act as another confluence on a different time frame. So although the fib on a 15-minute doesn't line up and price didn't tap into it, you can see here previous area. Remember I said where price has come to previously on the imbalance candle, that's where price can then come back into to test and then go to the upside. And this was pretty much exactly what happened in this scenario here. And if we actually look at where you could have bought to, if we go on the high time frame, we play price. Yeah, look again. If we go down, show this again. Perfect tap into this area. And because you're on the 15, remember I said I've now traded in a 15-minute. If we draw this fib across from these two candles, there's no real reason for you to sell long-term here yet, because we've got this, we're creating higher highs, higher lows, the basic market structure on this trade. Then By using the 15-minute fib, I just feel like you can refine your entries so much more. And you see that was literally pinpoint, 7 pips. And let's say, where do you put your target? So what you could do, you could just draw a fib across here. And let's see if that gets hit. It might get hit. Let's see. Might test the 61 again. Oh, there we go. Okay, that one didn't go to plan. But still, you've made profit on these cells here. You could have made profit from this buy all the way up here, taking out the previous highs. And you're pretty much done for the week. You make one trade, there's 5%. You make one trade, there's 4%. Why do you need to trade? You don't need to make 10, 20% per week from the markets. Yeah, and this is where you look to sell. So once this low was actually broken, so you see this was the previous low. We had this previous low here, this one here. And once this was broken and we closed below, that's when you can look to get into the short positions. And then obviously this clear market structure, we switched trends now to the downside. And this is when I'd no longer be looking to actually buy on this pair here. And now everyone's favorite pair, gold. Okay, so today on gold was a very, very nice setup. And I think a lot of you did actually catch this short position from 1925. And if you just remove this and remove the drawings, so you guys can see this clearly, you could have caught this with pretty much all the strategies which I've taught. So what do we have here? We have this clear liquidity area. You could say that there. If we go on, yeah, the high time frame, it's pretty much the same area. But why is this area key? We got a Wix. This is a retail resistance. And in this level, what's there above? Money. But the good thing about this trade setup, this was a perfect example of it. When you get that wick above, how do you know where to enter? And this is where I'm going to show you guys how to do it. So there's always liquidity in a market to be taken. And once you've identified that, trading is literally so easy. So if we look across here, if we get this in this liquidity area here, as you guys can see, draw that across, look. So price was generating all this liquidity, We then made that push to the upside, tap into previous liquidity, whilst taking out this liquidity, and then we make that drop. And although it doesn't really seem like a big drop, like compared to everything else, it's still like 136 pips, which is, a decent amount on gold. And if you have good risk reward, which I'll show you now, let's say you enter here and you got your stop loss just above these wicks like that. And where would you target? Remember I think I made a video dedicated to this. I said that when there's consolidation, price will test into the consolidation, and it'll often test a imbalance area or an order block inside the consolidation before then going to the upside. So if we actually look clearly here, what can we see? Okay, this has been tested. We've got the 3 taps. Okay, we've gone to the upside. That's been taken. We got this one here, 3 taps. Order block has been tested straight away. It's been taken. But look at this here. Got another one here. It's been taken straight away. And you could say this one here, but this one didn't really cause a break of structure. This was the low. This was the new low. And then this was the last one here before we actually, you see this candle, this caused the push to close above this liquidity. So this is why we're looking actually at this one here. And if we draw this across, what do we have? Perfect double tap into this area. So you would have made a 1 to 5 on this trade alone. Personally, I risk 2% per trade, 2 to 3%. So that would have been a 1 to 10 on that one trade. If we look at the times, 11 to 12:45, so an hour and 45 minutes, you would have passed an FTMO, risking 2%. And that's literally how I passed my FTMO yesterday in 1 hour, making that 10%. Just risking 2% on a high probability setup, scaling in, and then you've made so much profit. Also, I just noticed it, added confluence. If we draw this line across here, Can anyone recognize what level we are actually at? Or you could just unmute yourself.
Psychological back level.
Exactly. So we have, why is that not changing? Okay, so we have 1925 and, we have 1900, we have 1925, we have 1950, 1975, these sort of levels where price acts around these levels. So what do we see at 1925 here? Put about 6-7 wicks in the area, came back tested. So the confluences for this trade, you've got liquidity taken from this area. You've got previous liquidity tested. So that's 2 already. You've got 1925 tested, 3 confluences already just from this one trade. And once again, you've got the fact that price has now broken out of the structure. So what does price have to do? It has to come back and retest the structure before they're making that push to the upside. And now we are going to, looks like we're going to approach the upside now. I think we might have had some news or something to create this push on gold to do with the war. Which, we could see 2000 on gold. But remember these bank levels, I had a sell limit at 75, which was so close to hitting, which was annoying. But yeah, does anyone actually have any questions on the stuff I've talked about in this Zoom today before we speak on anything else? No questions. Okay, is there any other pairs? Okay, I've gone through that. But does everyone see how simple it is and how you only need 1 or 2 trades per week to actually make decent profit? I made a good trade on EU on the Monday. So now I don't really have to trade for the rest of the week. I don't really have to risk my capital now or risk my profits just for the sake of trading. And that's the issue with actually being a full-time trader, because you'll just get bored. If you don't have anything else to do, you'll be like, okay, so now I've got a few hours free. What am I going to do? I'm going to look at the charts. I'm going to enter a trade. But no, that's why you've got to have other hobbies and other things to do. Okay, are there any particular pairs that work best on this strategy? I'd say mainly I've tested it most myself on gold and GU mostly, but I found it works very, very nicely on USD JPY. Do you still trade US30? No, I don't. US30 was, I traded it for a bit, but I actually started trading it when it was at all-time highs, and I'd never really traded anything at all-time highs before, so it was kind of a weird experience. The G-Day trade, what candle? Okay, so on this one, I actually drew the fib. So if you actually look here, do it from the top of this imbalance to the bottom of this imbalance across, and we had a perfect tap. And then this one here, from the top of this imbalance to the bottom of this imbalance here. There we go. Because at the time, this hadn't actually been tested. This was obviously the first test of this fib level. And then we did actually create the drop. But yeah, does anyone else have any questions? I hope it all made sense.
Hey, I will.
Yep.
I do not use the 4-hour anymore.
Not really, no, because I used to trade more long term. So I'd be looking for like 300, 400 pip moves on gold. But that was the reason for that was my stop losses were bigger. So now to make, let's say, a 1 to 5 or a 1 to 10, I have to make half of the pips. So I can do that in half the time. So the way I'm going to do that is by going lower on the time frames. And that allows me to get tighter stops, tighter targets, but the same risk to reward. And the best thing about using the lower time frames, from my personal experience, is you get more setups. So on the 15-minute, if you look on the 4 hour here on gold, look at all this. You see all of this area here. You know, you couldn't have caught these short positions really if you're entering on a 4 hour. You couldn't have caught trades within this area. If you look on a 15, look how many opportunities you get. You know, 1 4 hour trade, you might make a good 10%. But I could make 10% on this one trade, which was an hour and 45 minutes. But instead you're waiting, you know, that's like 4 or 5 days area here. And you can make profit every single day on gold. So that's why I kind of lowered the timeframes on my trading. The fib and the imbalance works on any time frame that I found, but I just do it on a 15 because that's what I've changed my trading to. Just use 15 and 30 pretty much. The 61, yeah, I pretty much only use the 61 now. I did like 100, 150 trades back testing on it, and I found it was the most effective. Like it's the one that got tapped most of the time. Is there a particular session to use the strategy? I wouldn't usually trade in Asia because a lot of times you'll just get a lot of consolidation or just really slow movements, and it's just not really worth it. You know, I'd rather either enter in London, catch a small move to set up the New York move, or like we saw today, this drop down in London to create the buys for New York. Yeah, the timeframes I use are pretty much here. I don't even know why the 1 minute's on there. But yeah, 15, 30, 1 hour timeframes I pretty much use on this strategy. The fibs, most of the time you can use the first tap. That's what I do, because sometimes it will just tap and go, and you won't usually get that free taps. You know, let's say you're late on the trade and that you get in on that third tap. It's kind of like extra confidence to get in on that trade because you are seeing constant rejections in that area. But yeah, it does actually say I only have 1 minute left of the Zoom because I don't have Zoom Premium. But but yeah, if anyone has any questions on this, be sure to drop them in the Discord. And I'm going to do weekly Zooms now to go through any questions and go through the trades I've taken and anything I've found in my back testing. But yeah, I will upload this to the site tonight so you guys can actually watch it. But yeah, hope you guys enjoyed, and I'll see you guys next week for another Zoom. It'll probably be Tuesdays or Wednesdays. And yeah, hope you guys can add this to your trading this week. I'll see you guys next week.